U.S. stock futures sliding this morning amid growing anxiety around President Trump's trade war. The Organization for Economic Cooperation and Development lowering its global growth forecast to 2.9%, down from 3.3% in 2024, citing concerns about President Trump's tariffs and trade policy. The OECD trimming its growth outlook for the U.S. even further, expecting just 1.6% expansion in 2025. For more on this, I want to bring in Paul Krugman, Nobel Laureate in economics and author of the Paul Krugman Substack. Paul, great to have you on. Thank you for making the time for us this morning. I know that in April, you called the odds of a recession better than even. Where do you stand on your recession call today?
A little bit lower, possibly because, there is the taco thing. Trump always chickens out, and he does seem, at least a substantial part of the time, to back down. Now, that remains to be seen, and we have no idea, actually, literally no idea what comes next on his trade war. But things are maybe a little bit less fraught than they seemed, but it's still a substantial possibility because who can invest in this uncertain environment?
Paul, with that in mind, what are the actual kind of checklist items that investors should be watching for with regard to these negotiations and determining whether or not there is a good deal that actually gets netted out on any of the fronts with trade wars that we've picked with multiple countries?
Yeah, so it's a real problem, which is that there are, in fact, no genuine deals to be had. The whole presumption of the Trump trade war is that other countries are treating us very unfairly, as he says, which is basically not true. We can talk a little bit about China, but the European Union has a tariff of less than 2% on average against U.S. products. What are they supposed to concede? What's the deal? So the real question is not what genuine deals, but whether other countries can and will devise face-saving stuff that Trump can call a victory and lead him to basically call off the dogs. And I have real doubts about that because I suspect that, in a way, I think all the people talking about taco are in a way making the off-ramp harder, be harder for Trump to claim victory while actually admitting defeat. And it's going to be really hard to see how this plays out.
It certainly is hard, but it seems like investors are taking the path of ignoring it, at least for now. Chris Harvey of Wells Fargo this morning saying tariff risks are already priced in, if not overstated. What do you think investors are banking on amid an environment where a Nobel Laureate economist is telling me that it's hard to game out where this is all heading?
Well, one of the interesting things here is that there are three markets to look at. There's the stock market, the bond market, and the currency market. And the stock market seems to say, well, all right, no big deal. We'll just ride this out. The bond market and the currency market are both basically saying, oh, my God, right? We're slightly off the highs, but 30-year interest rates are extremely high. By any recent historical standard. The dollar has weakened even as interest rates have gone way up, which is totally not something we normally see in the United States. We look like an emerging market. In this morning's Substack, I did a comparison. I said, the U.S. data kind of looked like Mexico during the peso crisis of 1994-95. Obviously, the numbers are a lot smaller, not a comparable plunge in the currency, not a comparable rise in interest rates, but the direction. Rising interest rates on a falling dollar is something you expect to see in a developing country, not in the United States of America.
So what are the longer term implications of that, Paul?
Well, the world seems to be losing faith in us. It's hard to read this stuff without saying that, international investors don't consider America a safe haven anymore, that they're not at all sure that the United States can be trusted to make good on its payments, that it's a place to park your money during a storm. Over the weekend, Scott Bessent, the Treasury Secretary, said there is no way America will ever default on its debt. When you're saying, for the Treasury Secretary to even feel that he needs to say that is an extremely alarming sign.
And it makes me wonder, too, about more broadly how we see that playing out in the economy. If there is that potential risk of the United States defaulting on its debts that requires the Treasury Secretary to refute that idea, what does that do to our economy longer term?
Well, we're kind of a low investment economy anyway. And to the extent, and we're definitely a low savings economy, we depend a lot on a steady inflow of foreign capital. Our trade deficit is basically the flip side of foreign capital investing in America because they think America is a good place to invest. If that flow starts to dry up, if we face we talk about sudden stops in developing countries, it's not so sudden for us, but if we're definitely seeing the flood of foreign money dwindle to a trickle, that's got to be bad for U.S. growth.
What happens if you have other world economies, world leaders who stop investing in the value of U.S. growth here, specifically looking at what we've seen either on the currency front or the bond front, and how those auctions have played out in recent weeks?
Well, remember, in some ways, if we're thinking about recession risks, these are somewhat offsetting. Higher interest rates shrink investment, hurt housing. Mortgage rates are now at nosebleed levels, and that's got to be scary. On the other hand, the weaker dollar does, make U.S. manufacturing somewhat more competitive, which is a bit of a boost. So it's not clear. I mean, a recession call is not that easy because there are some cross-cutting effects. But if you were to ask me, what do I think about the prospects for U.S. growth over the next 3 to 5 years, I'm marking them way down because we're sort of steadily undermining the basis for that growth.
That's even with some of the deals that President Trump has talked about, where you've got companies who have even traveled with him on some of his international trips, his first international trip of the Trump 2.0 presidency, that were all trying to get time with foreign leaders. They got that time, and we saw a wave of deals that from the likes of NVIDIA, from the likes of some of the cloud operators that got announced. What is the likelihood of those not just coming to fruition, but in the billions, tens of billions of dollars worth type of price tag that we expected?
Well, if you're in the world I live in, the jargon phrase is additionality. How many of these deals are deals that would not have happened otherwise? Probably very few. Think of yourself as a foreign CEO dealing with somebody like Trump, who gets a lot of, loves to boast about stuff he's accomplished. And you were planning to make an investment in the United States, or maybe even just thinking about it, but you're going to announce it as a plan. Are you going to say, actually, we were planning to do that anyway. This has nothing to do with Trump. Or are you going to say, thank you, President Trump, for making this possible? The incentives are obvious, but it does mean that you can't take anything that people say in these negotiations at face value.
I want to end by switching gears a little bit. I'd be remiss not to ask you about the attack on international students that we've seen playing out from this administration towards Harvard University. Can you talk to me about the economic impact specifically of making the U.S. a hostile environment for international students?
I mean, this is, if you want to think about even longer term, think about America 10 years from now. This is catastrophic. I mean, we are the world's leader in science, leader in research, a lot of it with really strong economic applications. A lot of that is built around research universities, and research universities in turn are built around international students. Remember, disproportionately, the international students we're really talking about tend to be graduate students. And look, I spent many years teaching at MIT. MIT science departments are not merely educational institutions. They are research hubs. They are places where the technologies of tomorrow are being developed with a mixture of industry support, government grants, and a lot of the brightest, smartest, most innovative people from around the world who are coming to America as students. Now we're saying, oh, you're not welcome, and we're going to go through your social media accounts and possibly expel you or even arrest you if you said something critical of President Trump, or just in general. Right now, if you're applying for a visa, the visa granting offices at all U.S. embassies and consulates have been shut down. This is saying, hey, we're basically destroying the American economy of 2035.
Where else do those students go, Paul? And do some of the universities start to set up shop internationally in other parts of the world, as we know that they've done with satellite campuses before?
That's certainly something that I'm sure they're all looking at. And so, yeah, I mean, one of the sort of most obvious place is Europe. Europe does have, great universities. They're not school for school on a par with their U.S. counterparts, but they're no slouches. And they can start to attract U.S. researchers, U.S.-based researchers. An awful lot of my colleagues in academia were not born in the United States, and they have home countries they can go back to. And then, yeah, U.S. If I were any major U.S. Research university, I would definitely be well underway in negotiations to either partner with a European university or create European campuses. Got to remember, we are not the only smart people in the world. We are not the only advanced country in the world. We do a lot of things really well, but if we muck up badly enough, then particularly, again, Western Europe has a lot more stable policy, highly educated population. We could still, lose the global race to Europe. We seem to be working on it right now.
Paul, always good to speak with you and grab some time. Thanks so much for joining us this morning.
Thank you.